Welcome. Today we're going to be discussing short-term lending, and with this one I'm pleased to be joined by Matt Taylor, Business Development Manager from InterBay Commercial. My name is Kris Corns, I'm Operations Director here at Crystal Specialist Finance, and it's my pleasure to talk you through the basics of bridging today. So, what is a bridging loan? A bridge is simply a short-term loan that can be arranged quicker than a standard mortgage. Bridging finance can be used for many various situations. Basically, the main aim is to extend the time needed to satisfy another scenario. So a bridge is a solution to a problem now, but it's not a long-term solution. All a bridge is designed to do is to give you time to get from A to B. And it's the bridge between where you are today and where you want to be in the future. They are short-term only. However, they are a very versatile, very affordable, and more importantly, a very useful option for when we're looking to solve client problems. We are an award-winning provider of bridging finance, and as you can see there, we were delighted to win the Mortgage Introducer Award last year for Bridging Broker of the Year. So bridging can be used for many different scenarios, as I've briefly mentioned. It is a short period of time, so it's often the cheapest option for raising the required funds. They are quick to arrange, dependent on the statistics you look at. Industry average can go anywhere between kind of 3 and 5 weeks. The quickest that we've got one done is 4 hours. That is an exception rather than the rule, and everything fell into place nicely on that, including a valuation already in existence, solicitors already on board, etc. But the key thing with any loan is let's keep that flow of information moving. Let's make sure that on day one, that everybody understands the outcome, everybody understands the target and the process, and that we all work together in order to collect documentation and to keep things flowing and keep that case moving forward. It also means that bridging can be used on what some people call unmortgageable property types. So this would typically be something like an auction purchase or a property with subsidence or that needs substantial work before it's habitable. So a bridging loan, perfect solution there for people to purchase that property, do some work to it, and then exit onto more mainstream finance. Other typical uses of bridging include chain break. So if you need to purchase a property before sale of existing, you can bridge on one or both of those properties dependent on the equity position to raise capital quickly in order to purchase that new property, with the exit there typically being sale of the previous one, but also can be used to refinance as well. Refurbishment, still a huge way that bridging is used, so turn a property into something else. This could be with planning, it could be just a simple, what used to be called a tart and turn, where you're just improving the property, new kitchen, new bathroom, redecoration, that kind of thing. Rebridging is another common area that people are using bridging finance. This could happen for a variety of reasons, but basically the original term of the bridge was too short. Now that could be the fact that the client was looking to get the maximum net loan out of it. It could be the fact that they expected a property to sell within a certain period and hadn't, or it could be due to delays on works taking place on a property. Most bridging is set up over 12 months. Some lenders will do that over 3, 6, 9, but there are lenders in the market now that will do that over a longer period. So some lenders will even look up to 36 months on bridging finance if that was needed. As with anything, the cost needs to be weighed up over that period, but it's all about getting that suitability right. Let's make sure we get the right outcome for the customer for what they're looking to achieve. Auction, always been a very popular reason for bridging. Typically, from when the gavel falls at auction, you exchange on the day, you then have 28 days to complete. So therefore it puts pressure on existing mortgage companies to provide a loan within that period, and many of them just aren't set up to do that. So typically you would then look to a bridge to purchase that while setting up the exit finance from a more long-term lending facility. Quick purchases, again, bridging can be turned around in a couple of weeks, so if you need to move quickly, bridging's the way forward. Cash flow, inheritance tax, probate issues, buying below market value, anything where money's either needed quickly, the security is not probably mainstream mortgageable. For example, repossessions. We've seen a number of scenarios recently where the clients are bordering on repossession with their existing lender. The existing lender does repossess, they'll put that in an auction, sell the property. Whereas with this version, if you can jump in with a bridge, what it does mean now is the client can then sell that property for a higher value and look to achieve the equity from it. As with anything, suitability needs to be looked into. It needs to be the right outcome for that customer, but it's certainly an option on the table for us. And then lastly there, property development. There's always been a very fine line between bridging and development finance, dependent on the actual nature of the works taking place. So if you are looking to do some work to a property, then bridging could well be a suitable solution for what you're looking to do. So advantages of bridging, again, it is a short-term option, so therefore it is more expensive than standard mortgage products. However, we're big advocates of bridging. It works really well when it's used as part of a tailored solution for your client. The exit route is essential. Nobody wants a bridge, nobody wants to stay on a bridge long term, it's simply far too expensive. So therefore the exit route is key. And let's discuss that, let's look into that on day one, and it's something that our team here will discuss with you when you first approach us for a bridge. What's the client looking to do and how will they pay that off? But bridging is quick, it can be arranged, it does say there in a matter of hours, as I touched on earlier, that was an exception. You normally, realistically, we're looking at 2 to 3 weeks to get a case completed. We aim to have all of our bridging completed within 4. But again, there are cases that have taken longer than that. Legal issues, title issues, issues with documentation or valuation. Whatever it is, we're here to work through that. Generally, lenders are much more flexible. Most bridging lenders have a manual process, they have a manual underwrite, which means they can be more flexible when it comes to income, affordability and credit history. The only time that really comes into consideration with income and credit is where exits refinance. If you've got a client that's trying to stave off repossession and the exit route is a mainstream refinance, we're going to ask some questions about that. If exit sale and payments are retained as opposed to serviced, then there's more flexibility there from a number of lenders. All types of property can be used as security. Again, we're seeing more and more short lease properties being purchased, where the property is purchased for cash or using a bridging loan. The lease is then extended, which increases the value of the property. It's then either refinanced to the mainstream or sold, because that property is then desirable. You can do considerable value adds if you are a property investor or a property developer going down that route. And where property is in a poor state of repair, again, these dreaded nil valuations on valuation reports. Now, I've never seen a property that's actually worth zero. What valuers tend to do with those is value them to a lender's criteria. With bridging, the property is given a value. It's given a cash value. It's given an auction value. It's given a value if it was left on the market for 12 months. And the lending decision then is taken by the lender rather than by the valuer. So that means that even if you have had a nil valuation from a mainstream buy-to-let lender, for example, that can still be done on bridging finance. The works can be done to give it an actual valuation for that lender, and then it can be taken back there to exit. Non-standard construction and using multiple properties. Again, the flexibility of bridging can't be overstated. That manual underwrite is key. It's all about a discussion, it's about understanding what the client's looking to achieve and structuring the best approach for us to get there. Matt will talk you through some of the refurb options shortly from InterBay's products. But there are some similarities between bridging and development finance. Both are intended as short-term solutions, and both can be used to finance new properties, either renovations or refurbs. Both of them need to be repaid once a project is finished. There are things now like development exit products, which are designed to step in once the development is done, typically on a lower rate than development finance because you've now got a finished article, and that can be held on that product and then individual charges released once the properties are sold. Development finance can be taken out for periods of up to 3 years, sometimes even 5, depending on where they go. Whereas bridging loans, if it's a regulated bridge, it's a maximum of 1 year. And again, there are lenders that will look at 18 months or more, some of them up to 3 years for bridging finance. The key difference between the two is what the client is A, looking to achieve, and B, how they need that funding structured. The thing with the bridge, if you do work on a bridge and you start the refurbishment project, especially if there is any demolition on the cards, bridging will release funds based on the uplifted value of that property. So you borrow 65% on day one, do some work to the property, top that up to 65% in 6 or 8 weeks' time. The problem with a lot of development projects is that value may dip, So if you take a house on a plot of land, for example, borrow 65% of that, then demolish the house, and then go back to the lender to get funds to start the build, there's a good chance that that property is now downvalued from what it was originally, just due to the cycle of development finance, just the cycle of value through that project. A bridging lender at that point will say, no, we can't lend anymore, whereas a development lender will have worked on the whole project plan, so they'll know when the releases of funds are needed and structure that accordingly. And again, development finance, the lenders there place a great deal of importance on previous development experience. If you are an experienced developer, development lenders want to get involved, they want to work with you, they want to back the project. If you've never done that before, it's a bit more of a gamble. So that way it's more of an equity lend, which therefore comes back to bridging finance. It may be the only option available for inexperienced clients, short of getting into JVs and things like that. So it's certainly really important that we don't just take a broad brush approach, that we don't just say, we've got a bridge, we're putting someone on a bridge. It's about understanding the client journey and understanding what outcome the client's looking to achieve at the end of it. And that's where a good specialist distributor like Crystal comes into their own. We understand all of these little nuances. We understand how these things work, what lenders want to see, what lenders don't want to see, and we can make sure that we find the right home for what your client's looking to do. The key thing there is working with the right lenders. We've got a panel here of over 80 lenders. Again, dependent on the reports you read, there are over 300 active lenders in the marketplace. The key thing for us is deliverability, it's experience, and it's making sure that when we put a client with a lender, we know that lender, we trust that lender, and that lender is looking after the client's best interests. Lenders that we've removed from panel in the past have been down to letting us down on those, where they haven't looked after the client interests. You're trusting us with your client, so therefore we need to entrust that to the correct home, and to make sure that any lender that we deal with is looking after the right processes and treating customers fairly. So when we're looking at refurbishment, when is a refurb considered a heavy refurb? A number of lenders will do light refurbishment projects. There are fewer that will do heavy refurb products. So the main differentiator is the level of work that's being carried out. So a heavy refurb would be generally anything needing a structural change, where planning permission is needed, any change to the footprint of that building. If it's just internal works, if it's just dividing rooms or things like that, that might not need planning, then that would typically be falling under light refurbishment and opens more avenues there. And again, as you'd expect, the risk is lower for light refurb, so the price is lower. So bridging is designed to offer fast, versatile solutions for a range of scenarios, typically with a time-sensitive deadline. So we've worked on our process to ensure that we can work with that. So inquiry to quote, very first thing that we need to do here is to get one of our specialists to discuss the client requirements with you. Let's work out what we're trying to do. Let's make sure we're all on the same page, that we all understand the deadlines, we understand the outcome, we understand what the client wants. We can then match that with the most suitable lender. So we aim to have that done within 4 hours of initial conversation. Client then applies if you're happy with the documentation that we've sent through. At that point, if there is a valuation fee, we'll ask the client to pay that, just so we've got that on file and we're ready to move forward. But where possible, we'll use an AVM if we can do that. Less likely where there's refurbishment works taking place or recently taken place, but if they can be used, they will. This not only reduces costs to the client, but also means that we can move cases quicker. We then get that case in with the relevant lender and work through their process. Depending on the lender we go to, we can instruct valuers and solicitors at the same time, which dramatically speeds up the process. By utilising whatever documentation we have on file, collecting any missing bits from yourself or from the client, we aim to get funds available to be drawn down within 2 to 4 weeks. As I touched on earlier, we aim to get all of our bridges here completed within 4 weeks where possible. If there is a set deadline, we'll work with that. But the key really is transparency. It's making sure that when the lender asks for a document, that we provide that document. The longer we spend discussing or debating whether it's actually needed, the less time there is actually to work on the case. So the key thing there is we're never going to come back to you and ask for anything that's not needed for a file. If we are asking for something, there is a valid reason for that. So if we can all work together to collect that document in, to provide that to the lender and to understand any issues around that documentation, it really does mean that we can get these cases moving and keep those wheels greased and keep things moving through the process. So a very quick overview for you then. Bridging loans from 10,000 upwards. It says there 30 million. The minute you go above 3 million, the number of lenders reduces. If you go above 5, it reduces even more. But there are lenders that will go up to 30 million. Lenders will use desktop valuations. They will look at dual representation. We've got lenders on panel that have no income verification or products that come with no exit fees or no early redemption charges. Lenders that will consider adverse, complete quickly. Look at below market value transactions. Although the market is smaller for those than it used to be, it certainly does still exist. And again, they'll consider all property types. And as you can see on the left there, rates start from 0.42% per month. Loan to values going up to 80%. And again, there are products there with no upfront fees, no early redemption charges, etc. So bridging, whilst traditionally seen as quite an expensive product, 0.42% per month for the bottom end, that's not that expensive at all. We were looking at some statistics the other day, and 75% of customers that had a bridge from us last year were paying less than 1%. 1 in 5 customers that completed on a bridge were paying less than 0.6%. So bridging is certainly a lot cheaper than people think it might be. So when we're looking at heavy refurb, again, many of the same criteria apply. Rates are a little bit higher as you'd expect because the risk to the lender is greater. And loan to values there up to 75%. The key thing is up to. Every scenario is different. Every lender has got a slightly different risk appetite and they need to get that moving forward. Key thing is all down to that conversation. Let's make sure that we all understand what we're looking at, how it needs to work, and what we can do to suit it. And we also are confident in our abilities and our relationships here at Crystal. So we do pride ourselves that if you do receive a non-regulated bridging quote elsewhere, then the relationships we've got with our panel lenders mean that we will either beat that quote, which is what we pride ourselves on doing. If we can't beat it, we'll certainly get that matched for you, so you know that you are delivering the very best possible outcome for your client. And in specialist finance, we do consider ourselves as experts. It's all we do. And again, you can see at the bottom there, we're delighted to have won a number of awards last year for service. We're passionate about specialist finance. You've placed your trust in us, and we need to talk you through the process, provide updates on your cases, and not just hide behind technology. Technology is great and it's a great facilitator, but it should give people the tools to deliver. We don't rest on our laurels, so we know we're only as good as the last case, and we want you to send your next one. So we assist and support you throughout the life of that case and beyond. One of our key buzzwords internally is service. Our flexibility means that we can find unique solutions for your customers, and our relationships over the time that we've been in business have been developed and nurtured so that we can do deals that maybe other people can't, or that we have the relationships we know who to speak to when it comes to a difficult transaction. We aim to respond quickly. We aim to complete your case in as short a time as possible. You only have to see some of the case studies that we send out that give you an example of how quick we can complete cases when we need to. Education is really important to us, so it's up to us to inform you on market trends, to provide you with webinars and educational materials to ensure that you're one step ahead. So when a client does walk in and sit in front of you with a difficult or a specialist opportunity, that you can be in the best possible position to help that client, to advise that client, and then ultimately to complete that business. Specialist is our mainstream, so for you it can appear daunting at times. They can look difficult cases or difficult propositions. But for us, it's about assisting you with your current case and helping you to find new ones. Transparency is really important to us. We don't believe in hiding fees. So all fees will be discussed and agreed up front. So there'll be no hidden surprises for either you or your client at the end. It's all about that communication. It's all about everyone understanding where we are and what we need to do to move to the next stage, and exactly what that will cost and when. And we are all human, so we do know cases will hit problems, down valuations, things coming out of the woodwork that people weren't aware of. So for us, it's about being proactive to take action, to either look to resolve that issue or to provide an alternative lending solution, or failing all of that, to come back to you very quickly and tell you that we're unable to help and why. A quick no is as important as a quick yes. You don't want to be hanging around for weeks waiting for a decision from a lender. And although I mentioned earlier that people are key to what we do, technology is the enabler. Technology enables us to get faster. It enables us to be more accurate. It enables things to pass between parties much quicker and much easier. So for us, it's about working out which solution's going to work best and fitting that within our process. What we don't want to do is to get everyone to change to using a certain type of phone or a certain type of app or a certain type of communication method just because it's easier to work with. For us, it's about empowering our people to be in a position where they can make decisions and report back to you. And then last but by no means least is expertise. People are core to our business. We have vastly experienced people that have been in the industry for many years in many different roles. And we also have new people. New blood is important to bring into the industry to challenge the status quo, to challenge the way we think. As it says there, we don't do anything other than specialist finance. We know our strengths, but we also know where the improvements can be. And we're working hard both with our internal processes and with our external parties, the lenders, the valuers, the solicitors, in order to make the whole process as easy as possible. The process, really simple. Contact us any way that you see fit. Email, website, telephone, come to the office, or you'll see our guys at numerous events around the country. Key thing there is to trigger that dialogue with one of our experienced underwriters. That will enable us to place that deal and to issue the quote. Our new business team will find you the most competitive and relevant product and issue terms. Those terms are sent to you for you to discuss with the client and decide on the best course of action. If that is application, brilliant. Complete the forms, send that in to us. That's where we do the credit check, that's where we do the land reg, and that's where the ball really starts to move then on getting that transaction completed. You will get a dedicated loan manager, and our processing team will then handle everything from that point forward, including working with the solicitors in order to get that case completed. We don't see our job as ending just because solicitors are instructed, because a lot of the time that's where some of the more complicated matters can arise. The last thing we want to do there is leave you or your client high and dry and not able to get through that. So for us, our process is that we actually see that right the way through to funds in the client's bank account. Only when that's done do we see our job as being complete. And again, that means that we need to work with our key partners really closely in order to understand what they might see, what they might need, where the problems might occur. And it's our job to get those ironed out and to get that transaction moving as quickly as possible. Which leads me nicely onto InterBay. So InterBay are one of our key partners here at Crystal. We do a large number of deals with them each year. We have a very good working relationship with them. And it gives me great pleasure to hand over to Matt Taylor, Business Development Manager from InterBay Commercial. Thanks, Matt.
Hello, my name's Matt Taylor, Senior Business Development Manager for InterBay Commercial. Today I'd like to talk to you about short-term funding solutions, or as it's more commonly known, bridging finance. And during this brief presentation, we'll discuss the following areas. Who are InterBay Commercial? Why are brokers looking at the bridging sector? I'll talk to you about our developer exit proposition and things to consider moving forward for your business in terms of opportunities for your clients. So first of all, who are InterBay Commercial? InterBay Commercial is part of one savings bank who have a group balance sheet of over 9 billion, the first new bank to float on the stock exchange in the last 10 years, and we joined the FTSE 250 in 2015. Some recognisable brands on the right hand side of the screen are Kent Reliance for Intermediaries and Precise Mortgages, who following a recent merger joined the One Savings Bank group. Most importantly, and a common theme that runs throughout all of our brands, brokers are our business, and we want to provide you guys with opportunities to write more business in the specialist market. So, why are brokers looking at the bridging sector? And why do I believe it's an important tool within your kit bag when advising and speaking to customers? Let's just take a moment to explore the wider bridging sector so we can truly understand the opportunity available. In 2017, the gross bridging market was worth 4.3 billion. The market has increased over 28% since 2013. And for me, one of the most noticeable figures on this screen is rates now start as low as 0.44 per month. I think historically, clients have always taken the opinion that bridging finance is expensive, difficult to exit, and has been seen as a product of last resort. As I have already alluded to, for me it's a vital tool for any advisor, especially when speaking to serial investors, professional landlords and developers. Underwriting is focused against property, the exit, which is key, and also the borrower profile. 83% of lenders are secured as first charge. To give you some further figures, the average term of a bridge is 11 months, average loan to value is 46%, average interest rate 0.84 per month, and it's estimated that the gross bridging market in 2019 was worth 4.8 billion. Average completion times are at 43 days. Bridging is often associated with speed and the need to complete a deal quickly, and whilst that is absolutely paramount and key for clients, over at InterBay we also feel that needs to go hand in hand with being able to deliver on promises and keeping costs at a reasonable level. 34% of bridging loans are taken out to facilitate refurbishment of property, something that I'll come on to later, and again for me is a key area and provides landlords and brokers with a key opportunity. So why look at the bridging sector? Investors are looking for ways to maximise profit, drive up the returns they receive on their investments, and coupled with the fact that buy-to-let lending and commercial lending is becoming ever more specialist, a bridge really is a great tool to assist your clients with maximising their returns. We've seen SLAs move in the market, leading to the requirement for quicker funding, and this is key. Over at InterBay Commercial we have a dedicated underwriting team, completions and legal team, and also solicitors that offer dual representation, all helping to speed up the process for the clients. Rates have been more competitive than they have in previous years, and that has led to a change in client opinion. In our experience, it's not driven by the cost of the loan, it's more driven by the return that the client can see after a project is complete, or the GDV, as we would refer to it, gross development value. So what short-term funding options are available? Here at InterBay Commercial we provide unregulated loans for the purpose of light, medium refurb, heavy refurb, developer exit, to fund auction purchases, short-term release of equity, and to provide funding for commercial property purchases. For light and medium refurb, we consider this to be a refurbishment project that will be undertaken where works do not require planning permission or building regulations, and there's no change to the overall use or nature of the property. For example, no internal configuration changes. It tends to be redecoration, replacement of bathrooms, kitchen, replacement of doors, and generally modernisation of the property, often leading to an increased end value. For heavy refurbishment, again this would be secured against an investment property. Conversely, we would consider a heavy refurbishment project to consist of the requirement for planning permission or building regulation to be met. For example, structural works, internal reconfiguration, or works such as extensions or loft conversions. Our developer exit proposition is again secured against residential developments where the project has reached practical completion stage, benefits from all necessary consents and warranties or professional consultant certificates. Properties must be marketable or only recently offered for sale. I'll speak about this proposition in more detail shortly. An auction purchase, as the name would suggest, is where the client is on a tight timescale to secure funding following a successful bid in an auction situation. Often there is a requirement to complete within 28 days, and therefore a long-term facility is not deemed suitable. It's not uncommon for an auction purchase to be combined with either heavy or light refurb. And again, over at InterBay Commercial, this is fully acceptable. Our expert team of underwriters are positioned to cope and understand the needs of investors. To give you an example of where short-term release of equity may be applicable, you may have a client who has future plans to dispose of a property, or simply it's unencumbered and they wish to raise capital for another purpose. The key to any short-term release of equity is making sure that your client has given clear consideration to an exit strategy. And a particular strength over at InterBay is of course commercial property purchase. So we've discussed the opportunity. Let's now take a more in-depth look at the terms your clients can obtain. For residential property, buy-to-let and HMOs have the ability to lend up to 75% loan to value on a gross basis, with the exception of heavy refurbishment, which would be capped at 70% loan to value, given the nature of works that would need to take place. Rates start as low as 0.44 and then increase depending on the loan to value tiering your client wishes to achieve. For commercial and semi-commercial property, again we have the ability to go up to a gross loan to value of 70%, rates starting at 0.75. With our loans, they are non-serviced as standard, meaning that your client is not needing to make payments to service the monthly interest whilst the bridge is outstanding. However, if you do have a need from a client to service the bridge in order to obtain maximum funds from day one, our underwriters do have the expertise to assess the viability of the client servicing the deal, and this can be offered by exception. Our arrangement fee is 2%, again rolled into the loan to value, and there is no exit or early repayment charge, ERC, to pay when the bridge is redeemed. And we offer terms between 1 and 18 months. So a true flexible facility with competitive rates and no nasty hidden charges at the end of the term, or indeed whenever your client chooses to redeem. The length of the term is generally dictated by the works involved and outside influences such as contractors being on site, time it may take to obtain planning or listed consents, and in instances where the strategy is to dispose of the property, clients will also need to build in time to market and complete a sale. Speaking of sales, that brings me nicely onto our developer exit proposition. If you have clients who are developers, in my opinion, you should be discussing with them our developer exit proposition. What are developers looking for? Quite simply, every developer wants to maximise profits from each scheme. They also want sufficient time to complete the journey from acquisition of a site to the final end product, where they'll no doubt decide to hold or sell assets. Developers are also looking for the right and fair price for an asset that they've developed. Ultimately, that's where their profit is. If the developer clients are also buy-to-let investors, they may choose to retain some of their assets and place them within their existing buy-to-let portfolio. So how does this link into bridging? So a developer exit solution is a great product allowing clients to clear potentially more expensive development finance, allow them to capital raise against the GDV of the project to release equity for future developments, avoid development finance penalties, and in some instances allow them to maintain a credible and good relationship with their development finance company, clearing the funding line in order to move on to the next project. But crucially, it gives the developer time in order to achieve the best price for units they wish to sell, at a very competitive price from 0.44 per month. So let me bring to life the information that you've just been provided with. Customer A purchases a 3-bedroom, semi-detached property worth $185,000 at auction and needs to secure finance quickly as part of the sale terms of the auction. The property is in need of refurbishment and not in a habitable condition. The application was received by our dedicated in-house bridging underwriters and credit-back terms were issued within 4 hours. The case was promptly completed by our team. The client has now completed then the necessary refurbishment, which has seen an uplift in the property value, and he's decided to retain this within his property portfolio and redeemed our bridge using a normal buy-to-let mortgage. The client is now seeking further bridging finance as he continues to trawl the auctions for opportunity. A very simplistic case where a bridge was a clear and correct solution for the client. Customer B had developed 3 properties in London. He required a developer exit solution in order to repay existing development finance and capital raise to move on to his next project. The loan amount required was $13 million. Our transactional credit committee agreed that the security on offer was sufficient a transactional credit committee agreed to approve the case subject to evaluation, which met with our requirements, and we were able to offer a 65% loan to value loan for 13 million, giving the client time to sell the properties. Key things to consider for me: placing a deal. Who do you place business with at the moment? How do you place bridging finance? Do you even consider this as an option? Are you happy to specialise in this area, or actually would you like to team up with a partner such as Crystal Specialist Finance, who have the expertise and knowledge in-house and great relationships with companies like InterBay Commercial that can provide these solutions to your clients? Do you have professional landlords and investors who are looking to generate capital growth and see better returns from their property investments? Are they seeking opportunities, and do they have the capability and resource to refurbish properties and improve property? Do you have developer clients on your books? Have you asked them what their long-term strategy is? Do they wish to sell units once they've built? Do they wish to hold some? Or quite simply, do you have clients who are just hungry for some short-term funding and assets that they're willing to secure against? Whatever the situation, don't miss the opportunity. InterBay Commercial and our key partners such as Crystal Specialist Finance are here to help. Thank you for your time.
Thank you for that, Matt. Really informative webinar there. I really hope you found that useful. We do offer a number of these up throughout the course of the year. Our key focus is on education. It's on making sure that you, as the client's broker or advisor or intermediary, have got all of the information you need, have got all of the tools that you need available in order to place more and more business for your clients. So please keep an eye out for more webinars that we're releasing. Keep an eye out on our social media channels and on our emails for upcoming events. And I hope to be speaking to you again soon. Thank you.